Hello, all you lovely people out there. How are you all doing? I'm Kate Hill, and I'm here to give you the best unbiased and honest commentary about our property markets, along with lots and lots of really fantastic hints and tips as we go. So, taking the opportunity of this latest COVID lockdown, I have got news for you on all those superlative property figures from the moment. So stay tuned. Just before we get started, if you are keen to find out more about some of those common investor mistakes that people make, then please watch this video right here. Okay, let's do this. Our current property boom shows no signs of slowing down at all, with Aussies buying property at record speeds. Homes sold on average in just 32 days in May, down from 37 days in April, according to realestate.com.au. Now keep in mind that's just an average. Eager house hunters were even quicker than that in some states, with properties on the website selling in just 24 days in the ACT, 27 days in New South Wales and 28 days in Victoria. Now, as most of you know, we are out and about buying property every day, and I can tell you firsthand that it's even faster than that in many cases. Realestate.com.au's economist says that the market continues to boom with demand outpacing supply. Buyers are having to move really quickly to compete in these market conditions. While demand may moderate over the coming winter months, views per listing actually increased in May, and it is now just shy of this historic high from earlier this year. The report also reveals that for the first time, there were more than twice as many searches on realestate.com.au for properties over $1 million than there were for under $500,000. People have got money in their pockets. SQM Research reports that the national vacancy rate fell to just 1.8% in May, compared with 2.5% a year ago. SQM say that the vacancy rates continue to fall Australia-wide, which is forcing up rents, particularly in regional locations. The report notes that vacancy rates dropped in Sydney and Melbourne finally, with Sydney now at 2.9%, down from 4% a year ago and higher. Melbourne is now the only capital city above 3%. The other 6 capitals are all below 1.5%. This trend of falling vacancies and higher rents is likely to remain through the second half of the year, given the fierce competition for rental accommodation in many areas, SQM says. Again, we at Adviseable can attest to this. We're buying lots and lots of property for our clients where the prospective tenants are literally queuing down the road to even get a look in. The Real Estate Institute of Australia president says that the median rent for 3-bedroom houses increased in all capital cities over the March quarter. Darwin had the highest annual growth at 17%. Pundits are saying that property prices will keep rising into further record territory next year as the Australian economy's stronger than expected recovery continues. And there is a good chance that they could continue to climb after 2022, some market experts are saying, although the rate of growth will eventually start to moderate. Well, we can all say that, can't we? SQM Research say there are still more buyers than sellers, absolutely, and the evidence suggests the markets will continue to rise. They estimate that Sydney house prices have risen almost 20% in the last year, with Melbourne also up. Prices in regional areas have also climbed, driven by those working from home who are seeking that cheaper lifestyle change. Commentators suggest that prices in Sydney and Melbourne could rise another 10% over the next 12 months. That will remain to be seen, with forecasts that prices will remain robust for at least another 12 months before this coming moderation. And finally, everyone, just in short, a little summary of some economic news that we had in the past couple of weeks. Credit Suisse released the annual Global Wealth Report, and in it shows that Australia now has the highest median wealth per adult in the world. Now, this is in part due to the high level of private dwelling ownership and partly due to the success of the superannuation stock that we have. Although the composition of wealth hasn't changed that much in 2 decades, there is absolutely no doubt that property ownership accounts for a really good deal of Australian household wealth. The number of Australian millionaires increased from 1.4 million to 1.8 million in 2020 and is expected to increase to 3.1 million over the next 5 years as asset prices rise, according to Credit Suisse. The population growth of Victoria slowed down quite a bit in 2020. Relocations to southeast Queensland was one of the key factors, as well as, of course, net overseas migration figures, which were down. Net interstate migration to Queensland climbed to above 30,000 for the first time since the heady days of the Aussie resources boom years and years ago. Also, the unemployment rate fell to 5.1% in May, which is a huge improvement from 7.5% only 10 months ago. Job vacancies continue to boom, up a massive 164% from a year earlier. Now, we will keep you posted on all things property from around Australia as our year progresses. I do try and give you the best commentary and content here on this channel, so please let me ask you to just quickly hit that subscribe button, click the notification bell, and if you are enjoying all this lovely free content, then please hit the like button too. I do appreciate it, and I will promise to see you again really soon. Bye.